Lance Danmeyer. I'm with Fairway Independent Mortgage. Who's that to my right?
That would be Mark Crater from Aspire Coaching.
Pretty lady at the bottom.
Guys have got me pushed down today. It's Jennifer Weissman with Benchmark.
All right. Well, Jennifer, you're in charge today. Guys.
I have a question before we get into things. What's everybody's favorite Christmas cookie?
Oh, I'm jumping on this one right away.
Right.
So my mom made these things called nut pastries, and oh man, they're my family is.
Were they the little white powdered sugar rolled things?
Oh, very close. But okay. My family originated in Croatia.
Oh, okay, yeah.
So she made these. She would make the fresh dough. And then she would cut squares. And we had this old almond and walnut grinder. And she would add, the mixture. She'd grind up the nuts. And then she would add a mixture to it. She'd put a little bit of that in the center of the square. And then she would pinch all four corners together and then sprinkle that with powdered sugar.
Yeah.
Oh, man.
Do you have the recipe?
It's buried, and I haven't. My mom's no longer with us.
Yeah.
But I haven't had those in ages, and you might just have inspired me to go find.
We'll get the recipe, and I don't know how much you cook, but I've been in the kitchen since I was 5. I'm happy to make them for you. Baking is cathartic to me, and I don't eat a lot of sweets. I just love making them, so I gift them to people. Usually this year is different, but usually I make 36 batches of cookies and candies, and I eat very little of it.
Let me see what I can find, Jennifer. If I can find them, if I don't have the recipe with me, I'll call my sister, see if she can send that down. But fun fact, during my debt journey, that is exactly what I learned how to do, was to cook. I desserts, not so much. So I'll find the recipe and send that over to you. That would be awesome to have that.
That's funny.
That would be what would be probably the greatest gift. One of the greatest gifts for Christmas for me would be a batch of those cookies.
Yeah, I'm happy to do it. And you talk about your debt journey and learning to cook. As we grow along this podcast, everybody gets to know us a little more. I started cooking when I was 5, and I had the 2 sets of twins, so I was a stay-at-home mom when I was married. But I used to teach a class called Budget Grocery Shopping and Meal Planning. And it wasn't all about couponing. It was about cooking. And it was about, if you've got a really busy schedule, then you need to have a quick, easy meal so you're not running out to eat that night. And then when I first got divorced, I love soups. And my kids don't eat a lot of the soups that I like. They don't like French onion. They don't like vegetable soup. So I would make and freeze soups to take to an office job that I had at the time. And the girls in the office were like, oh my God, that smells so good. So I started selling my soups to help supplement my income when I was, first getting divorced. But so with the not eating a lot of sweets, I make a ton of them. I love spritz cookies, and I like my sugar cookies with my hot tea. I love both those with hot tea, but I have my great grandma's toffee recipe, not a cookie, but a candy. And that's probably the one thing that I can't keep my face out of. I just freaking love it. I love it. It's so good. Lance, what's yours?
I'm going to top it. I'm going to go crazy. When you don't have your sight for a while, you can really sit back and savor the sounds and smells and come up with some of the stuff that's going to roll off my tongue here. So the best Christmas cookies ever are a delightful blend of tradition, flavor, and festive cheer. Picture buttery sugar cookies, perfectly crisp at the edge and soft at the center, intricately decorated with royal icing maybe, and festive sprinkles. Do I have you going here?
Mm-hmm.
Then there's the melt in your mouth gingerbread cookies, infused with warm spices like cinnamon, ginger, nutmeg, shaped into charming figures or houses. Add to this classic mix thumbprint cookies, fixed with vibrant raspberry jam.
Yeah.
Rich chocolate crinkles with their powdery sugar coating.
Those are so hard to make, and my son.
It's got to resemble the snowy landscape. Each bite a reminder of the cozy kitchen, sparkling lights, and the magic of Christmas past in the Danmeyer house. Yeah, are you playing a violin?
Yeah.
So that was brought to you by ChatGTP with a few intricate things put in there. That was a dramatic ChatGTP reading. Take it away, Jennifer.
No, what is your favorite Christmas cookie though?
It's got to be the sugar cookie.
Yeah. Yeah, I make like traditionally I make 6 batches of my sugar cookies and 6 batches of my chocolate chips. That's not dozen, that's batches. Because people just are like, I want them. I'm like, okay, fine, we'll make them. So I'll bring you all some. So again, right before we get into the meat of it, let's talk real quick about what we saw in business this week. Lance, you want to go first or last since you're kind of our feature keynote today?
I'll go first. Business this week here in the office, we are closing 40 loans in December. That's outrageous. Probably be about 7 to 8 million, maybe a little bit more than that. 40. So you can do the math on that. The loans are a little bit smaller, but I think we have 12 of them closing on the 20th. That's outrageous. Yep. So this year, I think we're coming out of the worst year ever, worst in 35 years of real estate and lending. And we're finishing.
Is that back to 92?
Yeah, way back. I don't know. The quote that was told at lunch was 35 years.
Yeah.
So in any count, I had a good month. I ended up strong. Had some very difficult purchases with people with very unique things. We've seen interest rates continue to come down. Jennifer, you and I are part of a BNI. BNI, you probably heard me talk about that Tuesday. We saw a little bit of chart of rates coming down about 0.5 point in a short period of time in 2 weeks. So that's wonderful. So a lot of activity. There's a lot of, right before we did this call, I told Jennifer, one of her clients says, hey, I want my daughter to buy a house. So it's that kind of thing. People watching this, tell people about us. The word of mouth. We try to do an exemplary job, and we know that we do an exemplary job when our clients are passing on their children and relatives. So we had an example of that right before this call.
Sounds good. Mark, what's going on in your world?
Yeah, so over the weekend, I got a testimonial from a couple that I've been working with over the last probably 10 months. They had actually moved from Mississippi to Oklahoma. Sold one house in Oklahoma, in Mississippi, and finally they're walking into are negotiating a house in Oklahoma right now. I think I might have said they moved into a house in Oklahoma. They're in the process of working through that process. The testimonial that they gave me was that they had paid off. They became debt free. Paid off the last debt that they had, which was a student loan, about $60,000 over the last. So roughly over the last 10 months, they were able to pay it off, and so no consumer debt. So we're again from last week. We're starting to see people where they've said, "I've had enough. I'm only getting average results. I have to do something different, and I have to do something. I need better results." Right. So that's one. The second, I picked up another potential client. We're meeting this Thursday in person to talk about stabilizing a family, stabilizing their finances, taking control, and approaching a debt. Walk through what was the purpose of why they wanted to do it, and their response is, we want to be out of debt. We don't want to have any more debt, and so that's what's happened for me this last week.
So it's funny, when somebody comes to you, they're coming to you because you've been trained in this. You've also experienced this. A lot of times in situations, people think they know the best way to handle something. For years, many of your clients, I'm sure, thought they knew how to handle money. They knew what debt was. They knew this. And then they reached the point where they're like, holy cow. So one of the things I was not involved directly in, but tangentially came to my knowledge this week. I'm in a lot of national real estate groups and connect with a lot of realtors locally and elsewhere, because I always want to hear what's going on. Is this something that I need to be able to take advantage of for my clients? Is this a problem I need to be where I can keep my clients from getting into problems? So, for example, sometimes, Lance, people are like, I got to pay off all my debt. And I mean, sometimes that's the case, Mark, but I got to close my credit cards to get a home loan. And we know that that's sometimes the worst thing you could do is closing accounts. If you don't know the profession, you can get yourself in a situation. And I became aware of a situation this week where a person was very good friends with a realtor, but they went to an iBuyer type company where you can let yourself into a home and you can make an offer directly with them. No one representing the buyer in this part. They were doing their own. The contract was okay, but there were some, like, she had to sell her home to buy this one. And if she didn't close by a certain day, they would consider extending it, but there was going to be a per diem charge. And the same company that she was looking at buying the home from would consider buying her home, but it was outside of their buy envelope, like the size and the area they buy it in. So they connected her with another investor who would look at buying her home. They go under contract. The investor backs out. And so before, again, talking to her friend who's a good real estate agent, she goes and contacts another investor, a couple of siblings from another state, and they're like, oh, yeah, we'll buy your house. We'll do this. We are going to now become co-owners of your home with you. And you've got 45 days to sell it. We're going to charge you 20-some thousand to do this. And you can list it on the MLS with your realtor, et cetera, et cetera. And you're in this contract for 45 days. And so much about that is not in her best interest. Now, that being said, there are times when an iBuyer or an iSeller might be the best situation for someone. I will tell my clients, hey, you know what? In your situation, yes, we can look at doing that. I've evaluated it for clients. But if you can find a good ethical realtor to look at things for you and say, yes, this is good, or no, this isn't, or hey, we need to bring in a real estate attorney to assess this. Just stop before you start signing contracts. And the same goes with new construction. There are things that I can do helping new construction. Before you go to new construction, stop and let's talk. I wish I could keep people from getting in their own way. So Lance, you're going to talk to us about getting in your own way today too, right? It's
a little bit.
The scenes of a mortgage.
I'm gonna talk 50,000. Yeah, behind the scenes, kind of some 50,000 foot view, and we'll see what people think of it. I'm gonna try to go to a presentation screen with this, so let's see if I can do it.
Okay, while Lance is doing that, I'm going to remind everybody that you can like and follow us on Facebook, LinkedIn, YouTube, and please send us questions. If we're talking about something and you're like, hey, I'm in a similar situation, send us a message, call us, text us, whatever you need to do. We would love to help you guys personally with your situations. Or if it makes you think of something else, like maybe it's not your exact scenario, but you have a question, let us know. We're here to help.
Well, I'm going to start this, Jennifer. I want you to tell me if it fills the screen or not, because I won't be able to see that on my screen.
Yep.
But I'm going to go ahead and get started. I'm going to go ahead and present. And here we go. It should take over the screen in a second. Let me know if it has, please.
Okay. It's almost all. Do you want me to make it the whole screen? Let me see. That's the whole screen now. You good?
That's perfect. Yep.
Okay.
All right, let's go ahead and roll with this. All right, so I'm Lance Dama. I work with the church team. I work with my friend Michael Dean Church. I've worked with for many years. We're here at Fairway Independent Mortgage Company. We're one of the largest mortgage companies in the world. And if you look up there at the top right, you can see the Aspire, the Aspire logo. That's actually Mark's company. Very cool that that's up there. And I'm going to be changing this throughout the presentation to my brand, Lucky Dog, the Lucky Dog team, and Jennifer's as well. I Love Tennessee with Benchmark Realty. So we'll go back to Aspire right now, and I'll flip through this. You can still see me, guys?
Yep.
See my presentation?
Yep. Your presentation, yes.
All right. Should be changing screen. It says behind the scenes of a mortgage. Is that there?
Yep.
Yep.
Good.
All right. So this isn't super sexy. It's kind of boring, but I'll walk it through. So the life of a loan starts at the top left. We'll talk about a few of these sections. So the first thing is the application prequal. This is once you start talking to me, the lender. The second part's the pre-approval. We'll talk about what the difference in those two things are. The next thing is when you're actually under contract and working with Jennifer. The next thing is when I have all the documents that you give me from Jennifer and we move into processing. Then from processing to underwriting, I'll explain all that, then to closing, and then the post-closing and servicing portion. These are 7 important facets and pieces of a loan. A lot of these things you may not even know are happening, but I'm going to tell you, all the people watching today, about this. All right, so application and pre-qual. So the borrower completes a mortgage application. How do they do that? They can do it over the telephone and speaking with me. They can do it the old-fashioned way, which is fill out a 4-page piece of paper, or they can use an app that I have at Fairway. It's called the Fairway Now app, and the app resides on your iPhone or on your what's that other device called, Jennifer, that you use?
My iPad or
No, that phone. What type of phone? Android?
oh, good God, Droid, yes.
Yes, she
That's
uses
right. Droids, we rule.
Yeah, so the Droid people of the world, you can use your Droids. It's an application that actually rides on your desktop. It's it's an application that rides on your phone. It's absolutely amazing because you can do your electronic signing with it. You can upload documents through there. It's also amazing because when you're working with Jennifer, one of my other partners, they can actually be notified when certain things are happening. Things that Jennifer asks, she doesn't want to know every piece that's happening, but she wants to know when a certain milestone is passed, maybe when it moves to processing, or when the appraisal's been completed, or something like that. So realtors that are watching that, you'll absolutely love that portion of it, is using our app. I think I'll talk about more of that maybe in a couple of weeks, Jennifer. The next thing we do is a hard or soft credit pull. Why am I talking, Jennifer? Why do you think I'm talking about hard or soft? And make this PG, please.
Editing language again. So because every time somebody's like, I don't want to do a full app because they're going to pull my credit and it's going to ding it and this, that, and the other. But it's, like I said, worth about a piece of bubblegum wrapper if you haven't done a full pre-approval. And right now we're talking about the pre-qualification.
Absolutely. So when we actually start with the soft pull, and there's 2 reasons we do this. Number 1, with the soft pull, we're going to get all the information we need that comes with the hard pull, except when you do a soft pull, it doesn't trigger what are called trigger leads. And trigger leads are that you need to know this, and that is that when you make a mortgage application, the fact that you have made a mortgage application is sold to hundreds, if not thousands, of companies at that very second. Why would they do that? They've been doing this for 30 years. However, for the past 20 some years, credit has been for free. The mortgage industry, the real estate business has been very robust, certainly before the last 2 years, for the 8 to 10 years before that. And so this information is for sale, and companies can buy it. Different mortgage companies can buy it. For example, if Jennifer had made an application with me using a hard pull, as soon as it was submitted, her phone would start ringing. She would start getting texts. She would start getting emails. Hey, yeah, Jennifer, this is Lance with ABC Lending, and I see that you're buying a house in Brentwood. And she'd be like, where did you get that information? Well, they don't know that she's buying a house in Brentwood, or they don't know. They're using what's called metadata. They're looking at where the application came from, maybe that part of the world where that person lives, and they use metadata. It really upsets a lot of people. And it's not a 2 or 3 phone call thing. It is a barrage of hundreds, if not thousands, of calls in 72
Literally
hours.
talked to someone about this today, and she was in tears because she had so many, and it deleted her deceased father's voicemail because she held so many voicemails.
I'm sorry, I got all excited about this, started talking super fast, but that's an exact reason, Jennifer, and why. You can go on the do not call list. You can talk to me or Jennifer or Mark about that after this call, or we can post it maybe in a follow-on link. But there are ways to register to be on the do not call list, asterisk. When you do that, in some cases, people can't call you that you want to call you for certain reasons. We can talk about that in another episode. Yep. So it's worth talking about. We're just going to do a soft pull, get the basics about you, and then we're going to do the pre-qual based on your stated income without any real documentation. Okay, so that's a pre-qual. We're just going to pull your simple credit. We're going to go up by what you told us you make. I make $72,000 a year. Okay, we're going to go with that. We're not going to have any documentation, and we're going to tell you, well, it kind of looks like you can do it, but we haven't looked at your income. We haven't really checked anything out. Why would we want to do that? Because sometimes people don't know what they make, or sometimes people don't understand some of the things that underwriting is going to look at later, which is, for example, let's say that someone makes $50,000 a year. They had a bad situation a few years ago, and they took a loan against their 401k, and they elected to pay it back quickly, and it's paying back $1,000 a month or $500 per pay period. Well, when we qualify someone later, when we get to the actual qualification process, that's going to be taken into the calculation, because yes, you were making, let's say, $5,000 a month, but you're paying back a debt of $1,000 a month. So our new baseline is $4,000. That's a simple thing to explain, but maybe I should talk about moving on to the next step. which would be the pre-approval. So the number one difference between a pre-qual and pre-approval is the documentation step. So the pre-qual is based on what you're telling me, and the pre-approval is based on the hard evidence. That hard evidence includes W-2s. If you're self-employed, it includes taxes. It includes if you're divorced, we will have to see the divorce decree to see if you are due money or you're going to be paying out money. It's hard evidence based on the borrower's financial picture, which includes all credit, debt, and income calculation. The value of how much I can lend will be determined after we go through that information. You typically will need to meet with the loan officer via over telephone or a video call or in person. And then we move into the automated underwriting system stage. Jennifer has asked me, we call this AUS. I'll talk about that in a second. And then a full pre-approval strengthens negotiations with making an offer. When I work with Jennifer, the realtor on here, she wants a full pre-approval. When she goes and makes an offer for her clients, she wants to know that they lock, stock, and barrel can afford what they're doing. She doesn't call me and say, hey, Lance, I want to buy a $500,000 house. Can you see if you can get qualified for 480? Because we're going to offer 460. No, she wants to know what they can buy so she can go with the best educated offer and be strong. Her reputation and the client's reputation is at risk, right, Jennifer? You're not going to, we can talk about that at a different stage, but she wants an exact number, not an if number and not a wish number. She wants an exact number, and that's what I give her. All right, automated approval. I was just talking about. What is this AUS thing? So AUS is a technology-driven underwriting process that provides computer-generated loan decisions based on the application. So when someone fills out the loan application, that 4-page written app or the Fairway Now app I was telling you about, all that information is fed into a computer at either Fannie Mae or Freddie Mac or the government guaranteed underwriting system, which is USDA, or maybe it is manually put in front of an underwriting. But the automated systems are a desktop underwriter with DU. They're typically more lenient on debt ratios for government loans. LPA is loan product advisor for Freddie Mac. Is typically more lenient about credit events. And sometimes, Jennifer, you'll like this, they'll allow for 1 year of taxes for self-employed borrowers so long as they've been in business for 5 years.
Yeah.
That's important because we had this thing called COVID a couple of years ago that kind of really kicked people's pocketbooks. And if you were self-employed during COVID, it was a tough time. But if you, in this example, if they met all the other criteria, we might just look at 2023's tax returns if they've been in business, if that helped them get the deal done. The AUS for USDA is called GUS, Guaranteed Underwriting System. And then there's other types which are desktop and manual underwriting are accepted for other government loans. So each different system has its individual guidelines. Jennifer she's heard me say in the past that Fannie really likes people with good credit and Freddie really likes people with reserves. So sometimes we'll build a loan based on those two prerogatives to see if we can get it through the automated underwriting engine. Excuse me. All right. So when we're doing a pre-approval for someone, we're looking for red flags. Jennifer built this especially for you because you're always asking me, what exactly are people looking for? So these are the kind of things that the automated underwriting system and or a manual underwriter is going to look for. Number one, mortgage rates. That's the Achilles heel. It's the scarlet letter. It is the death tone. It is the black plague of getting a loan is mortgage rates. Okay. You don't want them. You want them at least to be you don't want them at all, but if you're trying to do a refi, you can't have one within the last year. And I don't know what just happened. Does anyone else?
No, but hit
Nope.
tab and let's see if we can get back to it. Let me jump us to a regular screen.
Oh, we went back to Q&A. Does it say Q&A?
Nope, it doesn't say
No.
any of that.
I'll get back to it. I'm going to stop sharing. I'm going to go
There you
back.
Yep, perfect.
I'm glad I saw that happen.
And while you're doing that, the underwriter's duty is, if I understand it correctly from a layman's point of view, to make sure that they're lending to someone who is most likely going to fulfill their obligations of their loan that you're doing.
Yes. Their
Right.
job is to fulfill, correct. And that is determined by the automated underwriting engine that I was talking about a second ago.
Right. And
I
if you
could-
say a manual, then that's when you have an actual person with eyes on it. It says, yeah, no, the automated system is valid here. Or you're on the small screen, by the way, or hey, no, I see where the automated system might have gotten fooled, but my human intelligence versus AI sees where there is a path forward here.
Correct.
Okay.
You go above and beyond.
Just like for going to layman's terms.
All right. Entire screen. This is not popping up on the screen.
It's coming up it's coming up as the app, not the whole slide deck. If you go to slideshow size, start from current, it should do it.
Hey guys,
As we play,
how about there? Let me try one more thing.
Yeah, it's still in the app. You need to go on your computer. You need to go to that screen and go from the current. There you go. That's going to do it.
Okay.
That's it.
there we go.
So pre-approved, the red flags are going to kick it. Mortgage lates, foreclosures, forbearance, bankruptcy. There are workarounds for bankruptcy, judgments, non-medical collections that are totaling over $1,000 or more. That's something that Congress has recently changed. We can talk about that another time. They've been helpful to people because people have a lot of medical debt. Frozen credit scores are red flags. Not enough tread lines, depending on the loan programs. New lines of credit, they're not yet reporting. When people tell you we're going to open new credit, red flags for income or variable income, less than 2 years. The year to date doesn't match the salary or their hourly, which by the way, that happens all the time. That's just life. We help correct that. Less than 40 hours work per week, less than a 2-year work history, variable incomes increasing by more than 25% year over year, declining income, job gaps. That employer marks on the verification of employee that their income isn't likely to continue. That's never a good thing. And I'm going to be honest.
That happens with contract work.
Exactly.
And how long, if I have a contract, and that happens all the time here because we have like big industries like the auto and stuff. If I have a contract, do I have to have it? I'm assuming it's similar to when I had child support, 3 years.
Typically, we want to see a 3-year continuation.
Yeah.
However, this is something that often gets filled out wrong by the employer.
Yeah.
So it often comes back incorrectly, and we have to talk with them. Another thing, when an employer makes negative remarks on the probability, which is some people would contend is not legal.
Yep.
There you have it, contract employee.
Yep.
It's a red flag, but we can work through it, and constant job changes. And then with assets, they're looking for unsourced large deposits, cash, loans or borrowed funds, undocumented sales of assets, asterisk, Jennifer. We're working on something like that right now.
Okay, again, and I'll jump in and say this happens to my people all the time. They're like, I have money. I'm like, what is it? Isn't it in a mattress? No, I sold a car. Okay, do you have some receipts for the car? Because it's all going to match. You have to have sourced income. So we make sure you're not getting money from, terrorist organizations or drugs or loans that you're going to have to repay when you're borrowing large sums from the lender.
Well, I'm going to jump in. I'm going to jump in here too, as well, because as people are paying down debt or eliminating debt, it's not uncommon. It's not uncommon to sell large assets as a result of wanting to pay off consumer debt. So,
sure.
It based on that, what I'm hearing, Lance, is it's okay. Just document what you're doing and why you're doing it.
Absolutely.
What's the look back in the checking account? Like if I did, I'm like, oh crap, I just sold my car and I didn't document it and I don't know how to find the person that was on Facebook doing it.
It's 2 months.
I mean, it can't ding me forever. It's like 60 days or something.
2 months, yeah.
Yeah.
And that's just good communication with the lender and the realtor about planning about these things. And that's why I teased Jennifer and said asterisk, because she has a borrower that's doing this right now. It's a lot of things you'll hear us talk about on these calls. She talked about this deal earlier on, about minute 7. Sometimes it takes a while to get a house sold or investors come along. There's contracts that have to be met before you can move to this next step. And this borrower we're talking about has sold some vehicles, sold some things, and we'll have to document that. But she's like, call his team. Let's make sure we do this right. We got to be above board. So we don't get to the very last minute. And last minute doesn't mean the closing table. The last minute might mean 2 weeks ahead of time. We're like, hey, we can't move forward with this. We don't want to be in that position. We don't want to put Jennifer in that position. We don't want to put anyone in that position. Let me move on real quick. Going past the pre-approved red flags. Okay, so after we get that, then we're looking for it to be under contract with Jennifer. So once the borrower goes under contract and the loan is then triggered and set for loan disclosures, that's another conversation. Pricing options are sent to the client and discussed with me on what their rate's going to be. We might lock, we might not. We might let it float. We might lock right at the moment. Disclosures are sent to the borrower to e-sign, and the e-consent must be signed, and the disclosures must be sent to the borrower within 3 days. This is by Dodd-Frank and TRID, if you guys remember that term.
Yep.
the real estate
October
agent.
15.
Yep. And then if the borrower wishes to hold on for locking, the disclosures can be sent at a later time. All right. Then it goes into processing. I'm going to kind of skim through all this because these could be a whole meeting, so we don't even have a processor on here. All the updated documentation is required. All the docs must be recent for the processing date. We'll order up third-party items like appraisal, title, insurance, flood certificate, etc. We'll collect all the conditions that the underwriter is giving us or that the automated underwriting system is telling us that we need to fulfill. The processor actually sends for final approval and orders a credit refresh if we need to do that and request closing documents. So it's kind of jumping around a little bit. They work hand in hand with these guys with underwriting. Underwriting reviews the proper documentation based on AUS, confirms it meets the program guidelines, makes the initial credit decision or backs it up, and then submits conditions. So conditions are things that we have to get, items that we have to get back to the underwriter to review prior to closing. And then they also itemize what the borrower can bring to closing, and then they issue the clear to close conditions. Let's see here. Closing, that's preparing the initial closing disclosure, which is kind of like the old good faith estimate or the loan estimate. Sends the initial closing document to the customers, must be signed 3 days prior to closing. Jennifer,
Well, we have a delay. We have had that happen. Not
we
on my
always
channel.
have that call. Oh, does today count? And we request the funds and the wires to go out. And then there's post-closing. I'm going to skip over that. So any questions or questions I can answer, Jennifer? Just it's really a cursory overview.
Well, I have 100 things that I want to disclose. And one of the main ones is one of the reasons I do a buyer's consult is I tell them from this point forward, and I don't even care if you're not buying a house for a year because you just signed your lease or if it's in 6 months. From this point forward, you do nothing with your income or your credit without talking to Lance, because you don't know what you don't know. The other thing that I always say is, not that people are deceitful, although sometimes we have people trying to, I don't know, buy an investment home and say it's a owner occupied primary dwelling. But sometimes they're just uninformed and they don't know. So when you were talking about income, I make $125,000. But really, my base salary that you're allowed to count is $75,000 because my employer wants to save on the Social Security part that they have to pay by paying me in bonus, where I have to pay all the social on that side, the employer side and my employee side. And you can't count that bonus unless I've had it for 2 years. So there's all these things along that way. And I don't know if I say this, Lance, during my consultation, I say, getting a loan is a lot like a proctology exam. They're going to feel like they're all in your business, and they are. But if you were loaning someone a considerable amount of money, a couple $100,000, you'd want to know a lot of things. And lenders are busy. Even this year, Lance, you've been busy. You don't have time to be bothering somebody and asking for something that you don't need.
Right.
They're asking for it because you need. And then the other thing I tell them is, by God, get them what they ask for in a timely manner, but only what they ask for. If Lance says, I need your bank statements from November 8th through December 3rd, that's what you give them. Don't give them any more, because there might be something, not that you're hiding something, but there might be something that then involves a whole bunch more paperwork and explanation that wasn't even involved. And I say, it's like this. How many times have you seen in a TV show, whether it's fiction or real, it's a legal show, and the lawyer, the person's hired the lawyer. If you hire a professional, maybe you should listen to them. That goes for our jobs as well. But they've hired a lawyer, and the lawyer says, okay, we're going to put you on the stand, and I just want you to answer the question, yes or no. And so they get up on the stand and they go, Lance, were you at the party on Saturday night, and did you see Billy Bob and Susie arrive? Yeah, I did. And I couldn't even believe it because I knew Mark Joseph was in the back room. And then that, and they're like, shut up.
Yep, didn't need all that.
Yeah. Didn't need all that. I think it's also, none of this is designed to hide anything too. I think, I think that's important to recognize. Jennifer, you talked about, we're the process of lending a large sum of money. None of this is designed to, in overcoming that fear of it's okay to dive into this. We need to dive into this because that's what gets you from that point of not yet to yes, which we'll talk about.
Yeah,
next
that's what
week.
you get to talk about next week. And that's the thing too. I've always said that there's no bad questions. I come from a long line of teachers, and there's no bad questions. There are plenty of things in this world that I'm ignorant about. Ignorant means I just haven't been taught or learned.
Right.
And then sometimes when I'm talking with my clients, and Lance, I know that, you know, sometimes they're talking with you and they're like, God, I'm just stupid. I don't know this. I'm like, no, you just haven't learned it yet. And if we're having to repeat ourselves, that's okay, because it means we just haven't gotten it to you in words that you can understand.
Right. And the other part of this is that's why this team is together. And that is to, when you have those questions, you have a full range of professionals right here, right now, that can take those. If you're not sure about something, if you don't know, ask.
Yeah.
There's no harm in asking.
No.
And if it's a level of, you know, I really don't know if I should be asking this, or a fear of asking, we need to unwind that fear,
Right.
and get that out on the table, because that answers the questions and it gives us what we need to know on what we need to do.
Right.
Yeah.
Well, and you know, I said that if you hire a professional, listen to them, but that doesn't mean we're autocratic. You guys could ask any of my 4 children. I did not use the phrase because I said so or because I'm your mom. I did not go through and have big negotiations with my kids. They knew I was their mom. But if I told them to do something, I often would say, I need you to do X, Y, Z, or this could happen, or so that this doesn't, da, da, da. Same with us. If you don't understand something, then let us know. There are some things, like if you're hesitant to get this kind of a home, okay, well, talk to me about why, because it may not be a reality, or it may be something I do need to know so that we can help you find a different situation. Same with the lending. Well, why do I need to give you this? It's okay to ask questions.
Right.
What it's not okay to do is be obstinate in the process, because we're not doing things just because we're getting kicks and grins from it. There's no time for that. I have as much time to spend with my clients as I need, but I don't have time to waste on people, and I don't have time to chase people who don't want me to be their agent. I'll move on to the next. I have plenty of people who want to work with me.
Yeah, it's very much what I deal with as well. And that, you know, if you're mentally healthy and open to change, then I can get you from where you're at right now to where you want to go. Yeah. The whole framework of what we do and what I do is understand where you're at, what your goals are, find the obstacles that are in the way, and navigate those and call you to action. That is absolutely and if you're not ready for that, then it's very easy. You're not at a place. I'm going to talk about next week. And the phrase that I'm going to talk about is the desire to be no longer in the pain point has to be stronger than the pain point itself.
Yeah.
And I'm going to dive into that a little bit, because that has to do with budgeting. That has to do with knowing where you want to go and what you're willing to give up to get there, in order to get there. We're going to talk about that next week.
Good. That sounds good. Okay. Do we have anything else we want to share for this week, or is that a wrap on it?
No, it's a wrap. You guys, it was a great episode. We got Christmas coming up, so we'll meet next week right before Christmas.
Yep.
Right before the Tennessee-Ohio State game.
I know, right?
I'm not going to talk about the loss